To lead the discussion this afternoon, it is my pleasure to introduce David Carlyle.
Hi, everyone. Thank you for joining today. I'm David Carlyle of Elliptic, and I'll be moderating the session on Cryptoasset Compliance, a year in review and what to prepare for in 2021. For those who may not be familiar with Elliptic, is a blockchain analytics company that provides AML compliance solutions for crypto asset businesses and other financial institutions seeking to manage crypto asset related risks. And I think it goes without saying that 2021 was an incredibly action-packed year when it comes to crypto crime regulation and compliance. And we've got a great set of panelists from academia and the crypto industry today to discuss those developments. But before we get into the substance of our discussion, let's just take a moment to meet our guest speakers. So firstly, I'll hand it over to Kayla Eisenman of RUSI to introduce herself. Kayla, if you could.
Hi, yeah. Hi, David. Hi, everyone. My name's Kayla. I'm a research analyst in the Center for Financial Crime and Security Studies at RUSI. Generally at CFCS, we look at all types of financial crime and we do research on that, but my role specifically is emerging technologies, usually cryptocurrency. So I look at all sorts of intersections between primarily cryptocurrency and national security, which can range from things like crypto and money laundering, crypto and sanctions evasion, crypto and terrorist financing, all sorts of stuff. My largest program of work is on North Korea evading sanctions through cryptocurrency. I wrote a paper actually with David on that, I guess almost 2 years ago now, I guess a year and a half. And we have a program that's expanded from that. So I really look at sort of crypto risk and regulation.
Great, thanks, Kayla. Number of issues like North Korea we'll be talking a bit about during the session. Next up is Oliver Tonkin from the BCB group. Oliver, hand it over to you.
I'd love to search on my video, but I've been blocked from doing so. Could JP mind letting me? Thank you very much. There we go. Sorry about that. Hi everybody. My name is Oliver Tonkin, General Counsel and co-founder of BCB Group. We are a London and Switzerland-based financial services group providing OTC liquidity for cryptocurrencies, and also we provide rails for currency businesses to allow them and their customers to get fiat, in and out of the markets.
Great, thanks, Oliver. And lastly, I'll turn it over to our final panelist is Hui Wang from ChainTech.
Yes. Hi, David. Hi, everyone. So my name is Hui Wang. I'm the Chief Compliance of ChainTech and CEO of ChainTech. ChainTech is a Swiss entity of Matrix Ports, which is a financial services company for cryptocurrency. Matrix Ports is actually a spin-off company of Bitmain Technologies. Matrix Ports has offices in Switzerland, has offices in Singapore, Hong Kong, and a very small entity in Moscow.
Great, thank you. And we'll get to hear from our great panelists very shortly. But before we do, I just want to take a few minutes here at the outset to set the scene a little bit by reviewing a few key issues and themes from the past year in crypto crime and compliance. So if you just bear with me, I'm going to share my screen. Just to note, at Elliptic, we're actually going to be publishing an updated report on crypto financial crime typologies tomorrow. And it's a very detailed report that looks at about 35 criminal typologies that we know criminals are using to exploit crypto. But it also points to some trends from this past year that I wanted to talk about briefly and as a segue into our discussion over the remainder of the hour. And the report notes 5 key trends in criminal use of crypto from the past year. And I'm going to give you a bit of a sneak preview of some of our findings, which you can read about in more detail from tomorrow through accessing the report on our website. Now, firstly, one of the major trends, or maybe the major trend we saw in 2020 was a resurgence in the criminal use of privacy-enhancing technologies that offer greater anonymity to Bitcoin users. And in particular, we saw massive growth in the use of privacy wallets for money laundering. Now, many of you may be familiar with the concept of Bitcoin mixers. These are anonymizing services that obfuscate the flow of funds in Bitcoin and break the funds trail, and make Bitcoin less traceable. And for a time around 2018, criminal use of mixers declined dramatically. This was due in large part to the downfall of Helix Mixer, which was one of the major mixing services whose founder was arrested this year for laundering money on behalf of dark web markets. But this year saw an uptick in the use of mixing services again, including chip mixer service, which you can see there, its logo on the screen, but also another trend related to the rapidly growing use of privacy wallets. Now, privacy wallets such as Wasabi Wallet, which you can see there on the screen, are software crypto wallets that have integrated mixing features and can prove more reliable than standalone mixing services for users looking for enhanced anonymity in their Bitcoin transactions. And 2020 saw an explosion in the use of privacy wallets by illicit actors, with a 220% increase in their use versus 2019. And you can see this demonstrated in the chart here on the screen by the blue line, which represents the percentage of illicit activity in Bitcoin comprised by transactions going through privacy wallets, which now account for about 13% of all Bitcoin laundering, which amounts to about $150 million a year in illicit activity for this year alone passing through privacy wallets. And we expect this trend will continue. Now, a second trend that may come as no surprise is that criminals who use crypto assets were very eager to exploit the COVID-19 pandemic this year, just like other criminals. And very early in the pandemic, one of the major trends we saw that was existing dark web marketplaces that use crypto offered a ready venue for criminals looking to exploit the pandemic. Now, what you can see here on the screen are images of items for sale on dark web marketplaces, all of which relate to COVID-19. And really as early as April, very early on in the pandemic, criminals were selling items such as hospital-grade masks, fake remedies, medications like chloroquine, sometimes for marked up prices. And as you can see from these images, some of these products were sold using crypto assets like Bitcoin, Litecoin, or the privacy coin Monero. And so it's really highly likely that even with a vaccine on the horizon, or even as a vaccine emerges, criminals will try to exploit that and continue to exploit the pandemic really until it's over. And I think we'll continue to see them do that and carry out these types of activities until the pandemic ends. Now, a third trend that we saw, and I think as Kayla alluded to in her introduction, is that 2020 was really the year that we saw the use of crypto assets by sanctioned actors and terrorist financiers take on a new dimension. And for a number of years, there's been knowledge that state actors like North Korea were interested in exploiting crypto, and awareness that terrorist financiers were exploring crypto for fundraising purposes. But several cases emerged this year that exposed the really growing sophistication of these operations. Now, the US Office of Foreign Assets Control, or OFAC, issued several sanctions actions this year targeting threat actors using crypto, including Chinese money launderers exploiting crypto on behalf of North Korea. And the US Department of Justice also undertook a major asset seizure action against the terrorist organizations raising funds in crypto. And at Elliptic, our own research suggests that though crypto may still only comprise probably one of many methods terrorists use to raise funds, their use of crypto demonstrates increasing sophistication. Now, fourth, I think really one of the most exciting developments in crypto this year was the growth and innovation in decentralized finance, or DeFi, which, as its name suggests, involves the use of decentralized platforms to provide financial services in a more open manner. And this year really saw a massive increase in the use of crypto trading on decentralized exchanges, which I think, unlike centralized exchanges, don't have a central intermediary, and generally speaking, do not perform KYC on users because they're typically not regulated. Now, in the chart here on the screen, you can see some patterns related to growth on one of the largest DEXs out there, which is called Uniswap. And over the course of this year, actually, crypto trading on Uniswap overtook trading on Coinbase at one stage for monthly trading volumes. And this marked a massive increase in DEX trading volume across the year, and up from negligible levels in 2019. Now, while this use is overwhelmingly legitimate, the growing liquidity on DEXs makes it more attractive for criminals to launder funds through them. And we saw this year in the case of the KuCoin hack. This case involves an exchange in Singapore called KuCoin that had about $280 million in crypto assets stolen by cyber criminals, including various tokens and stable coins. And about 20 million worth of those coins were laundered via decentralized exchange platforms or DEXs like Uniswap and others. And it's likely one reason those DEXs were targeted for laundering is because they don't require KYC of users and aren't regulated. So consequently, there's major debate among regulators as to whether DEX platforms should be brought within the regulatory perimeter and what regulators should do about them, if anything. And that really takes us to our last trend that we observed from 2020. And this year really demonstrated the significant impact that regulation is having on crypto asset crime trends. Now, over the last 18 months or so, we've seen a huge amount of regulatory activity related to crypto, and I think probably most significantly guidance issued by the Financial Action Task Force in June of 2019. But the strengthening of regulation is really forcing criminals to move away from using major exchange platforms that are compliant and instead to smaller platforms that are non-compliant. And as you can see from the chart here, the blue line on the chart represents criminal activity passing through major exchange platforms. And really since the introduction of the FATF standards in 2019, we've seen illicit activity on these exchange platforms plummeting, as you can tell from there. And most of this activity is going from larger exchange platforms to smaller crypto to crypto exchange services that don't require KYC and are represented by the red line and are going up, or peer-to-peer trading platforms that don't require KYC as well and are represented in many cases and are represented by the yellow line. So we're seeing a clear migration of illicit activity from larger, legitimate and compliant platforms to non-compliant entities. And I think there's some good news in this, in that it's showing that regulation can work, but it also shows that enforcing regulation remains a major priority. And I think we can expect to see in 2021 a major focus on aggressive enforcement against those crypto platforms that aren't actually compliant. So that's just kind of a few minutes, just overview of some of the major trends we saw from the year. Again, you'll be able to access this in full from tomorrow, but I hope it provides a good snapshot of some of the issues facing the industry from the past year. So I think with that, we can turn to our panelists for some of their views. Now, Kayla, maybe we can start with you. I mean, you mentioned some of the work you've done on North Korea, and I mentioned at a high level some of the cases and issues involving sanctions there. But I mean, what's the picture, I mean, from your end in terms of, what's the threat landscape really look like? Maybe when it comes to North Korea, but also some of the other risks I mentioned there in the intro.
Yeah, I mean, I think the threat landscape actually hasn't changed so drastically when you're looking at, say, sanctioned actors in the last few years. Maybe it's changed a little bit more when you're looking more at terrorist financing. So when you're looking at sanctioned actors, for example, North Korea obviously isn't the only state that's sanctioned in some capacity and interested in some version of a digital currency. Now, sometimes that would manifest in something more like a central bank digital currency, which obviously is not, you're not looking at a Bitcoin in that case. And we've seen that, Russia and Venezuela and China are interested in that. But you also do have other countries that are interested in various forms of working with crypto assets that are already in existence. So you have Iran, for example, is extremely interested in mining cryptocurrency, sort of at a state level. So those are in play. I would say that North Korea is probably the most proficient at using cryptocurrency, and they are the ones that are to a pretty successful extent acting as a cybercrime group rather than acting as sort of a political entity. They have hacked exchanges. They obviously have ransomware campaigns that have been quite successful, both on the political side and also in the just gaining money side. There have been a number of cases, some of the ones you mentioned, even just this year, but looking back through the past 3 years or so, where they've either hacked exchanges and successfully laundered the money, or they have used various forms of mining, either legal or illegal, and laundered that. A lot of the laundering techniques that we're seeing from them, I think you probably would agree, David, are they match up pretty well to your traditional money laundering techniques. You look at layering, you look at utilizing centralized intermediaries that are either unregulated or aren't following regulation. I guess whether they're complicit or whether they just aren't doing it is sort of a separate question.
I
think she might have gone.
I think we might have lost Caleb briefly, but we'll come back to that. But Oliver, we talked here in the intro, I think, just about, the picture of risk, the picture of crime, and, it's all well and good to talk about, what North Korea might be doing or what's happening with privacy wallets and all of these things. But, obviously at a practical level, at a crypto business, you just got to deal with these things on the day to day, and what you might see day to day could look very different from what we kind of perceive as the high level threat. So, I mean, what for you, I guess, is, someone in a crypto business, what are the kind of the issues that are keeping you up at night, or the things you're just even seeing in a practical level that you're more worried about?
So, I mean, obviously, a lot of the work we do is on the on ramping and off ramping of fiat into crypto markets and out again. And I mean, we do help a number of OTC desks and some exchanges do that. And I think, I mean, and it partly chimes with the kind of COVID, people taking advantage of the kind of COVID thing to increase levels of kind of fraudulent behavior. And I mean, there has definitely been a trend where criminals are taking advantage, I think, of kind of more vulnerable customers, persuading them to onboard onto platforms, maybe giving them a wallet address to transfer crypto off platform. People just, either through ignorance or just because they're vulnerable, older people, vulnerable people are falling for this. And I think, I mean, exchanges are aware of it, and they are, I mean, and some of the more responsible exchanges are doing something about it, particularly around kind of profiling of who might be regarded as being more vulnerable, maybe through some age or other demographic factors, and they are making it, particularly on the crypto withdrawals or the off ramping, they're making it more difficult for people to do that accidentally. I mean, that at the end of the day, this is kind of old fashioned, old fashioned fraud, facilitation of fraud. I mean, there's nothing new under the sun. It's just it's another way of doing it. Advantage of the crypto markets. But yeah, I mean, it is a small problem, but it is definitely a problem that we've noticed. And I think, if I were running an exchange, I'd be increasingly mindful of it, and I'd be making it harder, I think, for people to accidentally onboard, which they most definitely do. And I think, I mean, that would be my main takeaway. I think there's a flip side to that as well, which is people are actually pretending that they've been onboarded accidentally. So they really are actually buying crypto, taking it off platform, and then saying they've been defrauded. It's a two sides of the coin issue in terms of fraudsters using exchanges to siphon off money from either from exchanges themselves or from people.
Yeah, no, it's interesting. You mentioned a point there that I think picks up on something Kayla mentioned, is that, despite the fact that there are components of the technology that are very different, and, we see some of these interesting features like privacy wallets or what have you that are, novel in a certain sense, in a way, there are certain kind of bread and butter forms of crime that just appear in the crypto world as they might in other places, and I think it gets to an interesting question about, how do compliance teams sort of reconcile the sort of the more traditional component of this with the new. And maybe turning to you, I know you have a background in sort of traditional financial services and now work in the crypto space. I mean, how do you think about that problem of kind of marrying up the traditional requirements with all the new components of this space?
Yes, definitely, David. I think you have summarized very well the trends in 2020 with the compliance side. We have seen, we do see a lot of progress in the industry in terms of KYC requirements. We saw a lot of announcements from exchanges like Deribit BitMEX, Binance, they have been tightening or elevating their KYC requirements. And also in regard to certain geographic groups of clients, they have been putting on a lot of restrictions. We see this level of KYC requirement has been progressing, being elevated quite a lot if we compare like to 3 years ago, not a long time ago. But nevertheless, I think there is still a gap between the current KYC practices in most of the crypto exchanges and the KYC practices in the traditional finance world. For example, private banks. In my view, there is still a gap existing between the two. What is missing essentially, I think, is the question on the source of wealth. For the moment, I think most of the crypto exchanges ask questions about identifications. So they do identification checks. This is, of course, part of the KYC process, but should not be the only parts. I think the source of wealth check is also quite basic for the moment in the crypto world. In my view, not enough questions are asked, not enough documents are required. I think for some clients with higher amounts involved, questions of source of funds, source of wealth should definitely be asked. And this is, I think, is a challenge for the industry because people are not used to that. People are used to privacy. They do not want to give up a lot of information about how the wealth was created. Actually, I think the source of wealth verification is, technically speaking, easier in the crypto world because the cryptocurrencies are traceable. So, you have tools like Elliptic, you can check the addresses, you can check the past transactions. So actually, some of the information is relatively easy to obtain. And it actually solves a part of the problem. So what remains is actually the customers need to provide their side of story to complete the transaction history. In my view, as a compliance officer, if both sides match, then the check of source of wealth is relatively conclusive. I think part of the solution is already existing with tools and technologies. Now it's a change of mentality that, as crypto exchanges will have to ask these questions, and the clients, if they would like to benefit from this very interesting asset, they have to comply.
I would absolutely agree with that, 100%. I think that is a big challenge for exchanges. They all ask for someone's driving license or passport or utility bill because it's easy.
Yeah.
We have seen a few examples. Some of them are very good at. Some of them do it. But I've seen examples where people are trading hundreds of thousands of pounds or dollars or euros of fiat to crypto to fiat with really very little questioning of where that money is coming from. A pretty superficial analysis of some of these customers suggests that it's not immediately obvious where it has come from. So I think that is a big challenge. And in terms of why, I think there's a great desire to automate because a lot of exchanges are huge with huge volumes of people. Hundreds of thousands, millions of customers, and anything that is source of wealth and source of funds checks are actually quite hard to automate because there's got to be some human subjective sort of analysis of where's this person's money coming from. It's hard to automate that, and I think that's why I think there's resistance to doing it. Partly because people don't understand that it's important, and B because it requires people, and that's not what crypto exchanges want. They want to automate. So I think that's a big challenge for the industry to really be doing what they should be doing to understand where wealth's coming from.
Great points and all that, and I think you noted a few issues. I think we can probably pick there for the remainder of the conversation. But I think one thing you alluded to, Hui, was the notion of perceptions and whether things are getting better and how people see things within the crypto industry and from without it. And I think it takes us to good point to some of Kayla's research that she's just going to share here in a moment on her screen. But Kayla's done some research this year looking at compliance practices and perceptions of those practices in crypto. She's going to share a few findings from that research with us just now.
Yeah, hi. And sorry again for dropping off, everyone. I honestly don't know what happened. My whole computer just froze for some reason. But we're back. So I'm just going to share this now. So just as background to what this is, obviously I work at RUSI, we're an independent think tank, and we partnered with ACAMS and put on this global cryptocurrency risk and compliance survey. Hopefully some of you have actually heard of it, even more, hopefully some of you have participated in it, as we surveyed over 500 individuals from traditional financial institutions, fintechs, cryptocurrency, industry bodies, exchanges, sort of other private sectors, so people working in law, for example, and then also governments and public sector. So we got a lot of responses from all over the world. I won't bore you by going into specifics of who specifically responded, but if you are more interested in that, I would encourage you anyway to go read the full report. So I've just pulled out a few really interesting findings. We have a huge amount of findings in the actual report. And what we surveyed about was essentially perception. So what David was just speaking about. We tried to figure out if the views of cryptocurrency differ so drastically between the cryptocurrency industry and sort of other public private sector bodies that are involved in this, and also if it changes, if perceptions change regionally. And the answer to both of those questions is yes. But I've just pulled out a few examples here. So this is more of a general view from all respondents, but I think this and the next slide are just, as we're talking about the future of cryptocurrency, I found it a good place to start. So we asked participants filling out the survey, cryptocurrency is mainly used for, and then rank the next 4 options. So the options we gave were investment and speculation, illicit purposes, occasional payments, and day-to-day payments. And overall, I know this chart is slightly hard to read, but overall, this is the order in which all participants total ranked them. So investment and speculation first, day-to-day payments last, illicit purposes obviously second. And that, to me, was slightly surprising because, again, this is perceptions, it's not fact of what it's used for. But I wouldn't say that the second use for cryptocurrency is illicit purposes. But it's telling to me that people in financial institutions are sitting there and they're thinking, actually, this is primarily what cryptocurrency is used for, especially when you look at the stats coming out of somewhere like Elliptic that's saying actually only, say, 1% of cryptocurrency is being used for illicit purposes. So it's that the perception really isn't matching the reality of the situation. Now that could be, just lack of knowledge, or it could be skepticism. It could be all sorts of things. What I found increasingly interesting is that we asked towards the end of the survey the same question, but we said in 5 years, think about the exact same question, but what the landscape will look like in 5 years. And again, this is not just cryptocurrency industry answering this question. Illicit purposes moved down to 3rd, and day-to-day payments moved up from 4th to 2nd, which I particularly found really interesting because I think currently a lot of people don't believe that cryptocurrency is used for day-to-day payments, and maybe that's because it's not. Maybe it's just because they're not using it. I would have probably guessed that occasional payments would have been above that. So I just found it interesting that there is this, even though there's such a skepticism now, there is this perception that in the future, crypto will be increasingly normalized on a more local and day-to-day level. I also just wanted to bring up, we did ask a variety of questions on compliance as well as regulation. I won't go into the regulation pieces right now, but we asked the sort of with the agree disagree scale, cryptocurrency service providers have a firm grasp on AML and CTF compliance. Do you agree? Do you not agree? So the purple is disagree. And as you can see pretty clearly, everyone except cryptocurrency industry disagreed quite vehemently with that concept, that cryptocurrency service providers know what they're doing and have a grasp on the compliance that should be taking place. Now, obviously, cryptocurrency industry said, we are doing great. So probably overestimating on both the crypto industry part and on financial institutions, public sector's part, or their skepticism. But I really thought that this was one of those questions that drew out that dichotomy and the difference that you're seeing depending on who you're asking about these perceptions and how much trust is placed in the providers that are being leaned on to do this. We had another question as well that I haven't included a slide for here, where we're talking about regulation, and we asked who should be responsible for the levels of regulation and compliance that are expected of an exchange. And, you know, financial institutions, governments, and other private sector all said it should be international, and then it should be national, and then it should be on the individual exchange. And cryptocurrency industry said, actually, it should be on the exchange itself. So it's just, you're really seeing the difference in how much faith they have in their own technology and their own systems. And then the last one that I'm just going to include here is we asked, how well do you feel cryptocurrency financial crime risks are understood by each of the following actors in your jurisdiction? Cryptocurrency industry, obviously, and this was all respondents as answering this question. So everyone thought crypto understood it the best, which is great, as they should. Although 58%, I would say, is still low. But then you see politicians down there at 11%, the media at 16%. I won't say it's a surprise. That's probably anecdotally what you would get from people who work in this industry anyway, that the media and politicians don't understand it. But given that the politicians specifically are quite involved in the future of what cryptocurrency will look like, whether it be compliance, whether it be regulation, whether it just be general understanding and the taboos around the topic, whether it's banned in a country, is concerning to me that everyone has such a lack of faith in how well that particular sector is doing in understanding and ideally, I guess, addressing these risks. That's all I'm going to share today. I don't want to take up too much time. I just wanted to sort of give you an overview. If you do want to access the full report, there's way more than just that, and it does give you a full breakdown of our methodology as well. Please check it out at rusi.org/crypto survey, and also feel free to email me if you have any specific questions about it, or if you can't access it for whatever reason. I am Kayla I@rusi.org. So I will stop that there.
Great, thanks, Kayla. A lot of really fascinating stuff in that report. And I mean, it picks up on some things we were talking earlier. I mean, you know, that whole notion of perceptions from outside the crypto industry about how the crypto industry is or isn't doing. I mean, you talked a little about it a little bit, but maybe you could kind of expand on some of your thoughts from before. Like, what can the crypto asset industry do to change some of those perceptions most effectively?
Yes, I think, first of all, as Oliver said before, a lot of things should not only be done by machines, not by tools, but by humans. I think to elevate the standard of compliance, AML, KYC standard, we need to invest in human resources. We need to invest in these things. We need to have competent compliance officers who are checking, who understand what crypto assets are, what are the cryptocurrencies, how do they work, what the blockchain, you know, they need to have this technology know-how, but also they need to have the traditional background of compliance officer working in the financial services industry. So I think, first of all, I think investment is important for the crypto exchange or companies. And also, I think education is important. Education is lacking. I see, as Kayla, the statistic presented by Kayla, I think the result actually shows one thing: people don't understand about it, not enough. And this is something that the whole industry has to work together. It's not one company's responsibility, but it's a responsibility of the whole, all participants in this industry. Education to the consumers, education to the peers in the financial industry, education to the regulators, to politicians. This is not enough either, because you know the origin of Bitcoin, cryptocurrency, is reserved for a small group of people. They do not really want to share that. They do not want to have too many participants in the very beginning. And now the things has changed. I think it becomes more and more important asset class. And this is, I think, in the interests of everyone to recognize it and to understand it.
Thanks. That's great. And I mean, maybe we can shift gears a little bit here. You know, we've talked a little about the crime landscape, you know, what that means practically from the reputation of the industry and perceptions about the industry, and day-to-day practices. But obviously there's a lot of other stuff that went on in 2020. There's a lot of news around things like Libra, now called DM, or and lots of news around similar stablecoin projects, or maybe more mainstream financial institutions like PayPal and others getting into the crypto space for the first time. Lots of news about central bank digital currencies. I mean, maybe Oliver, I mean, what for you was like, if you had to pick out one piece of news or one development throughout the year, about the crypto space that really changed things? What was it for you?
I mean, I certainly think that the use of stable coins has really exploded in the last 12 months. And it's partly driven by DeFi, as you suggested, which clearly is becoming. I mean, it's still very small in absolute terms compared to sort of conventional financial markets. It is still very small, but I mean it's growing significantly. Celsius, Genesis, Circle are coming in and having a real impact. And I think I mean it's not really a rounding error yet in terms of overall kind of what governments are looking at, but it clearly is on people's radar now. I mean the EU have come in with MiCA, which is clearly aimed at the stablecoin space. The UK Treasury are going to consult on bringing stablecoin into the perimeter as well, and I think that's partly because they are uncomfortable with what are regulated financial services being used, lending and borrowing. Just because it's a stablecoin doesn't mean there's not risk to consumers. And in the medium term, if it does continue to grow, possibly systemic risk. So I mean, I think that is definitely I think there's a potential for that to be more important than your kind of bitcoins and your Ethereums. I mean, I think how stable coins are going to be looked at by governments and sort of transnational institutions is going to be a big thing over the next 12 to 18 months for sure.
Yeah, no, it's a great point. And I think the G7 have been meeting this week, and I think stable coins alone are becoming a issue right on the G7 agenda. So it gives an indication of how seriously this is being taken. Hey, Kayla, how about you? What of all the issues that kind of popped up in the crypto space this past year, what was the big one for you?
Probably central bank digital currencies, or CBDCs. They're at least the one that I found to be making the most progress, I guess, this year, especially when you're seeing China really roll out their testing, and they seem to be ahead of the curve on that, for better or for worse. So that's something that I've really been keeping an eye on. I actually think, I mean, maybe more than this past year, that's something that will blow up in 2021 once the technology has really, sort of rolled out. So that's, especially because I do so much work on this piece with sanctions evasion, that's something that I specifically have been looking at how sort of central bank digital currencies would fit in with the other crypto sanctions evasion technology that we've seen, and those cybercrime sort of heists, if that might be able to be looped in with these CBDCs, especially given North Korea and China's historic relationships with each other. So there's just an interesting sort of global dynamic that's going on there. And I guess I don't have too much to say about how that has changed this past year, but it's very much my number one concern that I'm watching for next year.
Interesting, and I guess that's an interesting segue into some issues I know Hui, you're follow closely, familiar with, related to China, which has been a big issue on the CBDC front. But China's also been an interesting player on the crypto front for a number of reasons. Maybe you can give a little bit of overview how you perceive things there.
Yeah, definitely. I want to talk about one interesting regulatory development in China this year. A Chinese court in Shanghai ruled that Bitcoin is an asset protected by law. So you probably know that Chinese government has always been having a very ambiguous attitude towards cryptocurrency. On the one hand, China banned all crypto exchanges and ICOs a few years ago already. But on the other hand, however, mining is really considered as a legal activity, and it's very important. It's somewhat encouraged. About more than 60% of the hash rate is in China. So actually, if one person would like to calculate the cost of mining Bitcoin, they just need to look at the electricity costs in China. So I think cryptocurrency is a bit like a double-edged sword for the Chinese government. It wants to use cryptocurrency special characters to its advantage without these characters being obstacles to the controls they would like to exercise. So I think this court ruling is it's really a positive development. Bottom line, it assures the owners of Bitcoins in China that their assets are not illegal, and these asset value is recognized by the Chinese law. So Kayla mentioned also about this central bank digital currency in China. It's very interesting. It's such a interesting topic. Even my parents in their 70s, they're asking me about how these digital currencies working, because this is not just a topic we read in the newspaper. In China right now, in certain regions and cities, the civil servants are obliged to receive part of their salaries in digital yuan. So yeah, they are obliged to use specific apps to spend this digital yuan. So we will see what is the ultimate impact of the central bank digital currency. For example, in China's case, what will be the impacts on the payment systems like Alipay or WeChat Pay? What will if the users will really adopt the digital yuan, will they be forced to adopt it? And also, what is the other benefits of this digital currency, especially in regard to the dominance of US dollar in the global banking system? So I think we will see all these answers to the questions quite soon.
Great, thanks for that. And we've got about 15 minutes left, so I think we've had a pretty good overview here. So we're going to turn to some questions from the audience, because there's been some great ones coming in, a few of which we've answered in the chat, but some others we've not got to yet. So one question relates to the position of regulators and how innovative regulators are or not when it comes to crypto. So we've talked a lot about what the industry needs to do, but maybe turning things around a little bit. Oliver and then Hui, this question probably directed to you. Like, which regulators do you see as being the most sort of approachable and open-minded when it comes to crypto topics? Is it regulators here in the UK, other places abroad? What's the general picture from your perspective? Oliver,
I'll go first. So I mean, I've got direct experience of two jurisdictions only, really, which is the UK and Switzerland, which is two entities of which we're regulated. And I think, the Swiss were definitely ahead of the curve. They were the first, certainly in Europe, to sort of think about what crypto assets look like, different taxonomies, different sort of classes of digital asset, whether it's exchange tokens, utility tokens, security tokens. They were definitely ahead of that curve. The UK, the FCA have definitely caught up. They were maybe a little bit behind. Sort of a year or so ago, but they've put a lot of resources into their crypto asset team. There's currently a big program for crypto asset businesses to be licensed for AML supervisory purposes, which is pretty close to being done. And certainly from my experience in terms of the kind of Q&A that I get, they're a lot savvier than a lot more sophisticated than maybe they were a year or so ago. So that's encouraging. There's still, I think everywhere people are still kind of neutral-ish on whether this thing is a good thing or a bad thing. People get excited about AML, of course they do, but I think again it goes to points I mentioned about stablecoins. Governments fundamentally are always interested to keep some kind of oversight and control of the financial system. And when you've got a phenomenon like crypto assets that potentially allow things to happen that would normally be regulated outside that kind of perimeter, governments and regulators get nervous. And I think there's still a bit of a curve to sort of go up there for regulators to maybe get level with this space, because it's it's operated by very smart people who think very quickly, who are very imaginative, often quite well funded. And yeah, I mean, there's always going to be a little bit of a kind of running to standstill thing for regulators to to really keep up with the curve of what's going on. That answers the question.
Yeah, no, it does. How about you? What's your experience been?
Yes, I think Swiss regulators definitely has very open minds, and they have a special attitudes. I think they have an attitude of technology neutral. This is, I think, quite important for the Swiss regulator. And I also want to mention that the Singaporean regulator and Hong Kong regulator are also very open-minded right now. They are proposing new licenses. Hong Kong is doing a public consultation on the crypto exchange licenses. So they are ready to roll it out probably early next year. And Singapore also have this payment system license for crypto exchange and e-money. It's been, I think they have received a lot of applications for that license as well. So I think they want to keep the edge. They are financial hubs since many years. So they want to keep this advantage also because simply the business is booming there. So yeah, there's a requirement. The regulator simply have to catch up.
Yeah, I was just going to say I would second about that about Singapore. And also Malaysia has been, Bank Negara in Malaysia has been pretty good as well. But Singapore was really ahead of it even before the Financial Action Task Force recommendations as well. So yeah, I mean, obviously I'm not private sector, but I sit at a lot of these roundtable meetings that they're both at, when they're speaking to private sector, and they've been pretty open-minded about stuff and pretty forward thinking in this space as well.
Yeah, it's a great point, and certainly on that note, actually coming up soon next week, actually, Elliptic will be having a session with Clara Chu from the Securities Future in Hong Kong, Securities and Futures Commission in Hong Kong, who'll be talking about the rollout of the proposed framework there. So a good chance to learn a bit more about work that's going on in Hong Kong, as we mentioned. But a few more questions. We'll get time for a couple more. One question that came in was about terrorist financing, which we referenced at the beginning. Kayla, could you maybe talk a little bit about the picture of terrorist financing? Because I think as you alluded to at the beginning, things have changed there a bit this year.
Yeah, I will say that my view on this for the past, 4 or 5 years or so has been that the worry about terrorist financing in crypto is overblown, and that my opinion on that has not changed this year, even as we've seen more of these indictments come out. So that's sort of my vague position on it. Essentially, I know one of the questions in the chat asks about privacy wallets or privacy coins being used in terrorist financing. I'm sure there's some examples of that. We haven't seen that really at any large scale. The issue with terrorist financing, when you think about it at its core, is that a lot of these terrorist groups are simply either don't have the technological capabilities and knowledge that something like a state actor or cybercrime group would have, and therefore gaining cryptocurrency isn't that easy, and laundering cryptocurrency isn't that easy. It's something that if you have really any level of technological know-how isn't that bad. But to do it in a capacity that a terrorist group would need to be raising money is difficult, because you're looking at it more from the donations perspective, and that's where they've been most successful. And that it's not that it wouldn't help if you were doing it in privacy coins, but if you're gaining a lot of Monero from donations, it would be really difficult to cash it out, especially in some of the regions of the world that these terrorist groups are operating. I will say cryptocurrency has been pretty big recently when you're looking at, say, right-wing extremism, not necessarily right-wing terrorism, but right-wing extremism, because that is much easier in sort of the technological capacity of where you would be cashing out that money. But we really just haven't seen it at such a huge scale. I mean, even in 2016, 2017, we were seeing the types of donation and Bitcoin transactions that were in the US indictments from this past summer. This is just a bigger scale of what we were seeing them, them posting QR codes that will lead to a Bitcoin address and asking for donations. That's all happening in Bitcoin. That is something that I mean, I wrote a paper on it 3-4 years ago. So that's continuing. I don't see that specifically stopping at any point. It's nice that sort of these indictments are coming out and the law enforcement action is being taken there in the prosecutions. But I don't know that the concern about it being the new frontier in terrorist financing is necessarily valid right now. Maybe it will be in the future.
Great points there. Just, I guess shifting to another question someone mentioned. Someone asked in the Q&A here, where should financial crime solutions in the crypto space be focused? Should the crypto space be looking on improving compliance practices and solutions around SAR filing, or should the emphasis be on typologies detection, better understanding of things like source of wealth? I mean, Oliver, where do you think the emphasis should be in terms of improving compliance solutions and practices in the space?
I think SAR filing is an interesting one. I mean, at the moment, again, I've only got my experience of the UK to sort of to go with, but I mean, SAR filing is done here through an online portal, and it only really allows for you to file SARs in relation to bank transactions, which is going to have to change, because I mean, you know, when crypto firms do, you know, they'll be obliged to file SARs, you know, once they're licensed. And I mean, there's no currently way of doing that in a really kind of effective way, and certainly not in a way that allows law enforcement agencies to really have anything meaningful kind of data to action. I think that's an interesting one, and I think the other thing I think that should happen, and I think maybe exchanges should maybe look to themselves about this, is if they are on notice that transaction possibly does involve fraud, and they're notified of it, they'll be able to see where that coin has gone, because they've got all the hashes, you know, in their own systems. You know, there should maybe be some obligation on exchanges to notify law enforcement if they are noticed that you know, coin has been transferred off their platform that's the result of fraud. I think that that would certainly make it much harder for that coin then to be used by whoever's going to use it. But yeah, I think those are both putting onus more on exchanges to really, you know, trace coin once it's left a platform. I think is an important one.
Okay, thanks. How about you, Hui? If there's an area of focus that compliance solutions could take for the space, where would it be?
Yeah, I agree with Oliver about the SaaS reporting. I just want to add one thing about SaaS reporting, is do not forget that many of the crypto exchanges are operated from offshore places, and to whom to report these problems. It's really a question. You know, they probably want to report, but to whom? Who is the right regulator? Who is the right authority to report, and how? I mean, right now, I don't think we see a lot of SaaS reporting, even though probably we could detect certain problems. I think maybe I could imagine that many exchanges just, you know, tell their clients about their findings and ask them to refrain from doing things like that, you know, problematic transactions. But to really report them, I think this is still not being done enough, that's for sure.
I also just wanted to add, because this is reminding me, I had a conversation with a couple exchanges at the end of 2019, and they were saying, and they're very compliant exchanges, they're sort of pretty well known, and they were saying basically we file these SARs and then they don't go anywhere. Nobody, you know, the law enforcement that we're filing it to doesn't know how to do the investigation. They don't understand the terms that we're talking about even when we file the SAR, when we say X, Y, and Z things, this coin is moving this way, there's a hash, all of that, there's a wallet. They don't understand. They don't have the know-how in terms of crypto investigations to take that further. So it's sort of a SAR that's going into the void. And then they say, you know, we're holding these funds on our platform. Can we release them? We don't know. We don't want to get in trouble. We don't want to, you know, have something involved in terrorist financing or sanctions evasion or even just money laundering. But equally, we can't hold these funds indefinitely forever, like holding law enforcement's hand through an investigation. So I think for all that we want to talk about technological solutions, a lot of it really does lie in that sort of education piece as well.
I agree with that.
Great thoughts there. And I think, you know, it points to concrete area where I think both industry and the public sector can potentially work together across the coming year and beyond to really try and improve how things are done. And so I'm afraid we're out of time for the session. Been incredibly informative. Thanks, tremendous thanks to all of our panelists for sharing your thoughts, your views, and I think you left everyone with a lot to chew over in terms of big issues that may be out there going into the next year. So thank you all again, and I'll hand back to JP.
Wonderful. Thank you, David, Hui, Kayla, and Oliver for sharing all your practical experiences and for your time today, and of course in the time that it took to prepare for this session. Great to listen and overhear in the background. Definitely something for the FFE to build upon is our law enforcement engagement, which does kind of revolve a lot around the educational piece and making law enforcement more aware of the industry, the terms, etc., etc. So therefore, to be able to do their jobs better and also to support us in doing our jobs better. So thank you very much for all those insights. Thank you for joining us, and we hope to see you at the next session or later in the week. If we don't, have a very Merry Christmas.